Emily, of course, for these big banks and, to a large extent for all global banks at this point in time, we're talking about the same themes, aren't we? What really stood out to you in this trading update?
Yeah, I mean, I think, there are big themes going on the worldwide, but I think, what really stood out here is the fact that they have decided to completely scrap their dividend. They are the first of the big four Australian banks to do so. Commonwealth Bank of Australia and National Australia Bank both chose to pay reduced dividends. We'll get an update from ANZ tomorrow on it. And, I mean, I think though we're talking about this the whole world over, Australian bank shareholders have just seen dividends rise over the past few decades. So I think for retail shareholders here, which hold about half of the bank's books, this is going to be the moment when the severity of the crisis really comes home.
What are we expecting from the rest of the industry?
Well, I think, more in a way, more of the same. But, as I mentioned, two of the other banks have paid dividends, but everyone's clear that we're now into a much lower dividend outlook. The picture for bad debt is complicated by the fact that so many people are on mortgage payment holidays. And whilst the banks are checking in with people, it's not really until they come to the end, which is going to be into next year now, that we're going to get a picture of how many people are really able to resume their repayments and how many people are sadly going to be forced into sales. That's when things are going to get much clearer about the bad debt outlook for the whole industry.
Right, because to what extent, Emily, are we seeing kind of all of that being glossed over, or at least, I guess, papered over by the fact that we are seeing the enormous amount of fiscal support from the government coming through still?
Yes, and then I think that's everyone's concern. There's just so much stimulus in the economy at the moment, both from the government and also from the forbearance that banks are showing at the moment. They're doing everything they can to keep people in their homes and to keep what businesses can operate. But in a way, that is just pushing the problems further down the road. And all of this again, it comes back to the health implications. If the vaccine was discovered, if that was in use, if community transition was stopped and the economy bounced back, that's one story. But if things continue the way they are, then clearly, glossing over things isn't going to be possible forever.
Where do you see as being the big sources of stress, right? In terms of that mortgage book, is there any indication that this incredibly resilient property market that we've had across major cities in particular is really starting to show the fissures, I guess, of pressure from the pandemic?
I mean, we're starting to see some signs of strain, most notably in the apartment market. And that's, partly for obvious reasons that, the pandemic has, stopped international migration. It's stopped, international students who are often more likely to live in apartments. And so we've seen, big rental vacancies in the apartment market, which is obviously hurting those investors. In the more established home market, in Sydney's many, high-end suburbs, the signs of stress are a lot lower, partly because there's so little stock on the market that we haven't really got a huge read of, what's coming through. So, for now, the market is surprisingly resilient. That's not to say that prices aren't down, and that's not to say there aren't some forced sales.
Right.
But you haven't seen a cliff edge like in other times.